news. George Alexander Muthoot, MD at Muthoot Finance, joins us on the show right now. Mr. Muthoot, thanks for joining in. Want to discuss your numbers right away and how have Q2 margins shaped up? If you could just highlight, and also your NII has dropped by a good 5%. What's led to this kind of fall?
See, our business AUM has grown in this quarter, and consolidated this business is about 35,000 crores now, and standalone gold loan is 32,000 crores. These two are historic peaks for the company, and as far as the AUM. As far as the profit also is concerned, we have done 480 crores of profit this quarter, which is also really good in relation to all the turmoil which is happening in the markets today.
Yeah,
I didn't understand your question about the margins.
No, just wanted to know how the margins have panned out for the second quarter. If you could just highlight the numbers in greater detail.
You mean the interest margins?
Yes, obviously.
Oh, okay. Today the yield is about 21%, and our net interest margin is in the range of 11%. So that has been continuously we have been getting that. But having said that, last year this quarter our yield was about 23% plus. That is because there were some old loans which we had, or rather 6 months loans which got closed in that time, and that was a one-off high yield. But and even at that time we had said that it will come down to the normal level, and this is the normal level. 21% is the normal yield which we have, and we hope to continue that going forward also.
Wanted to understand about the recent troubles in NBFCs, which also you earlier highlighted towards. They've generated a lot of discussion with calls for tighter regulations as well. Do you think there is a need for tighter regulations in the first place? And how do you see these developments affecting your company and your sector as a whole?
In the last 2 months, we had, along with my CFO, we had gone and met most of the banks who had been funding us, and also the mutual funds, most of the mutual funds, major mutual funds, who had been supporting us in the last year and years before. They were definitely be able to understand the strength of a gold loan company, and a gold loan company never has any ALM mismatch or ALM problem, because our loans are generally, although given for a year, these loans tend to get closed in the next 3 to 4 months. So every month we get a collection of about 5,000 crores, and we disburse 5,000 crores or little more. That is why the AUM grows. So that's a very quick turnover for this. And if necessary, we can always get cash very quickly. That's the beauty of a gold loan company. Of course, it has its, people used to say you have a problem there, because most of your assets get turned out, fully turned in 4 months. But we have been able to maintain the AUM also. So as far as ALM is concerned, for a gold loan company, absolutely no issue for ALM, because we get the collections very quickly, because there are no EMIs, it's all bullet repayment, and the trend has always been the loan gets closed average in 4 months, maybe 5 months time. Okay, the banks and the mutual funds were able to understand, and they definitely know that there is absolutely no issue with NBFC. But as far as the total NBFC sector is concerned, banks have a total sectoral exposure limit for NBFCs, etc. There they had some issues, because we are also treated as an NBFC.
Okay, great to hear that. Also, the liquidity freeze, has particularly resulted in higher cost of funds. Do you see this impacting your profitability or your net interest margins going forward?
Yeah, we see in incremental borrowings, both from the CP as well as in the banks, we see a 1% hike in the cost. But since our gold loans are for very small amounts, the average ticket size is only about 30,000, and the customers are not very interest sensitive. And thirdly, among the NBFCs, gold loan NBFCs, we are considered as the most reasonable as far as interest rates are concerned. So when our cost of funds goes up, a proportionate or an identical increase in the interest rates also will be affected. So we have already affected a 1% interest rate hike, and it will be reflected in the next quarter. So in next quarter, our borrowing cost also may go up by almost a percentage, and our income also will go up by about the same 1%.
Okay. There were also, demands to create a special liquidity window as a source of emergency funding to the NBFCs to help them tide over the current situation. What is the status on that? And would you believe that this is the right approach?
I don't know. I still don't know how banks or RBI can help NBFCs, because unlike banks, NBFCs don't have any SLR deposit or treasury bonds with the RBI from where RBI can give NBFCs. But of course, helping NBFCs in this time is always welcome. In fact, I personally do not know from which fund or from where RBI can help, other than maybe asking banks to be more liberal with their lending to NBFCs. But if there is a special window or special funding from RBI, definitely welcomed.
Okay. Because banks are the major source of funding for your company, with 47% of borrowings coming from banks. Do you see any constraints by banks in lending to the NBFCs? What is your outlook on the margins going forward in this rising cost of funds scenario?
So as I told earlier, if the cost of funds goes up by 1%, we will increase our lending rate also by 1%. Because gold loan rates, unlike housing finance, etc., is not very interest sensitive. So a 1% increase is definitely will be accepted by the public. So cost of fund, etc., wouldn't be a problem. But as Muthoot Finance, we certainly have a very good franchisee for retail resources, which we have a very good customer base for retail NCDs, which we had been using in the last several years and decades. Last 1 year, 2 years, we have not been very keen on that, because the bank funding and the CPs we were getting at much lower rates. Probably we will now look at more fundraising through this NCD routes, and maybe have regular NCDs. At present, we have NCD issues maybe once in 4 months, 6 months, or etc. We will have it little more regularly, so that our funding dependence on banks and mutual funds can also come down. I think that is what RBI is also, RBI and the SEBI is also saying, that companies should have more of NCDs and less dependence on this. I think we are in the right direction there also. So as a policy, Muthoot Finance will be tapping the retail NCD market with such a big customer franchise. With 2 lakh customers coming to our branches every day, we have a very big customer franchise, and I'm sure they will be able to support us with the NCDs and the resources also.
Okay. Mr. Muthoot, pleasure having you on the show today. Thank you so much for speaking with us so candidly about how the quarter was and what really is the scenario with the sector as well as your company going forward.
Thank you.